Year end, Halloween, getting a little scary, November uncertainty, Santa Claus rallies, so much noise out there. Let's make it silent. Let's focus on the cycles, what we're seeing, some changes, some opportunities. Lots to talk about today, so sit back, grab that cup of coffee, let's get started. Hello, this is Mike Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, thank you. We just hit 20,000 subscribers to our channel this week. That is an amazing accomplishment. Thank you so much for tuning in. Now, why are you tuning in? Because we like to say we're a little bit different, outside the box, not following the typical mantra of Wall Street and big TV. So if you like that, please do consider subscribing. So today, we're seeing some changes. So I'm going to start off with the cycles. I'm going to go to the big charts, then sector spotlight, what keeps me up at night, and game plan going forward. So let's switch over to the big board. All right, let's get started. If you're new here, this is part of our process. We look at the cycles, we look at momentum, and we always confirm with the charts. The reason why I'm starting with the cycles first is because we are definitively seeing a change. I mentioned this in our last video. So we have been in cycle 3, okay? Growth slows, inflation accelerates. We utilize that with some of our investments. Fed neutral and stagflation. What we're seeing is a move to cycle 4. We're not 100% there, but I will show you some signs. Growth slowing, inflation decelerates, markets are decelerating. How do we know this? As of this morning, we have 43 companies that have reported on earnings, and what we see is minus 18% growth. That is big, okay? So that explains the cycles. Now let me show you how we take advantage of that in our investments. Okay, so first up, again, I called this the most important chart about a month ago. This is the monthly trend line going back to 1981. As you see, this line there is what's called negative divergence, relative strength, strength of the market. You see it going lower, lower, lower as we go higher. But the most important thing is that trend line bounced off it, came down, bounced off it, and we're bouncing off it again. We are up month to date, but we still have some time to go. So when I look at this and I take a closer view, now we're going to go out to 10. You see your trend line here. The most important piece down here is momentum on the long-term chart is very much positive. So right now, because of that, our long-term view is still positive. Somebody asked me that, is it a bull or bear market? I mean, technically, you're still in a bullish trend, but you can also have some bearish signs within that trend. So the long-term trend is still bullish. Here's our midterm view, weekly view, going back to 18, very definitive trend line. And you can see we hit it this week, and once again, we failed, okay? So when I look at that, is there any other signs down here? We look like we were getting a momentum crossover to the negative side, bounced off it down there. So for now, weekly is neutral with a negative bias. So let's take a look at the short-term charts, okay? And we look at the short-term charts, they're gonna help us make decisions, whether we're adding or deleting. So a couple things as we start up at the top, okay? I have our RSI relative strength on a 5-day. That shows the short-term trend. You saw right here, we got overbought. Not surprising, we then saw a little bit of a pullback, okay? So I'm recording this about 10 o'clock on Friday morning, and we are seeing a little bit of a bounce today. We're up a little bit as we go into the weekend, but what else do we see on this chart that has me concerned? Okay, here is volume. So volume has been low, keeps on going lower. All right, so that's an ongoing concern. And right here, volatility index. I keep saying price volume volatility. We're at 26.34. 25 will break trend. If it goes below 25, it gives us some more opportunity to add to those equities. But for now, we have to be careful, okay? So I'm going to go to the next chart and talk about momentum, okay? So what I have here is the S&P daily, but I took the histogram of momentum and brought it to the backside here. So one of the things we try and do is anticipate those market moves, okay? So when you see momentum, right, you can see it climbing, but now you can see it declining, okay? So to me, when I see that, the trend is still to the downside right now because we're seeing the momentum of the market going down. So I am negative, okay, on the short-term view. So now let's look at the broad market, right? The NYSE, and you can see a couple key things here. Number one, that's your high. We're still not back at all-time highs in a broad market. It just, again, confirms that it's a very shallow market with those big tech names, okay? Same thing down here. You're seeing momentum to the downside. So again, we're still not seeing that big breakout. Some new highs, new lows. Today, not so bad, 97, but still not in the 300s when we were driving into 2019. So now I want to take this a little bit further. This shows the entire broad market as far as what I'll call asset allocation, okay? Yes, we have, of course, NASDAQ up, bonds are up, S&P's up a little bit right now, but look at the rest of the market in negative territory, minus 20, minus 9, minus 8. So the rest of the market, again, continues to underperform, reaffirming that it's such a tight market right now, okay? The other thing, which is interesting, talked about this last time. This is our put-call ratio, okay? Put is protection, call is long. This is in the options market and can determine trends. And you see down here a tremendous amount of complacency yet again, okay? So the buyers are betting that we're going up. Not sure, don't particularly see that, but to be determined. Next, how about the bond market, right? Bond market has created some nice opportunities during the year. What do I mean by that, right? You look at the buy and add, okay? And I'll add that spot. Let me get rid of that. Add that spot last week where we went higher position-wise on our bonds. Why? You top out, you top out, you top out. So still a little up today, but the trend is still to the downside. We think we go lower before we go higher here on the bonds. So continue to have this right now, obviously, as our largest holding. So next up, sector spotlight. Okay, so starting out in sector spotlight, one thing about the cycles, you have to focus on the dollar, okay? So if we are in cycle 4, okay, this is going back to 19, dollar goes up, okay? Cycle 3, dollar goes down. You see that when dollar goes down, inflation goes up, okay? And that creates opportunities in some of those sectors like lumber, copper, etc. Now, let's be clear. This, the red line, is the trend for the US dollar, which is still down. Now, until proven otherwise, we now have the short term going up. Has to go above here to break trend though. But this week, we've had two, what I'll call really big moves in the US dollar, above 0.5, above 0.6%, which is a big move in the dollar. So this is something that we're really going to watch here as we go forward, okay? As you saw, quad 4, dollar up, and then bonds go down, which is exactly what happened this week. So gold, had a lot of questions about this. I thought you loved gold, Michael. Yes, I do, right? We've had it since 2018. But when you're transitioning from 3 to 4, cycle-wise, it doesn't do so well. And you can see here why, right? You topped out at the high, right? A series of lower highs, lower highs, lower highs. That is not bullish at all, okay? So we've cut our position from a full position down to 2.5%, 3% right now. Let's see what happens. Let's see if we see a move, but right now, I don't see it, so I'm okay with a smaller position. But some of those things that work well within cycle 4, consumer staples, we talked about this last video, started adding down here, went to a full position. Okay, so that has worked out pretty nicely. REITs, the REIT index, down rates, right? So if rates are down, that works out. Okay, now we've seen a little nice move here, little counter trend move. I will call that, let me go up here and finish that, a bullish flag. Okay, not at full position. With the pullback today, we'll probably go full position on REITs, as I like that, and also I like the upside opportunity, okay? The next one, again, when dollar is going up and rates are go down, look at utilities. Look how good that looks. Now, absolutely not surprising, seeing a consolidation. Again, it looks like another bullish flag, okay? I am at a full position here, so I'm not gonna add to that, but again, still have some nice upside if we continue in cycle 4. So sometimes it's not just what we own, it's what we don't own. A lot of questions about the banks and their great value, right? When you listen to CNBC, this one person, she's always nibbling, as she says, but you want to talk about value? There's a reason it's great value, because it's a terrible sector right now, right? Why? Well, obviously rates are very low. There's your top on the bank year to date, okay? You had a little bit of a move right here, but again, right? Lower highs, lower highs. That trend is to the downside. I do not like banks, okay? Now keep in mind, you can short banks. You can also look at the Russell 2000, which has the largest holding in financials, okay? Which is a short that we put on this week. So when I look at this again, the banks came out, they were playing funny stuff with their earnings, folks. Even though they say better than expected, they're moving around reserve requirements, things like that. So again, I do not like the banks going forward. Gonna watch rates. If rates continue in the downtrend I expect, I think this is gonna be a nice short-term short opportunity. Let's go to what keeps me up at night. All right, we're Zooming this morning. Kind of amazing. I'm here by myself. Andrew is offline, so I'm recording, had to set up all the cameras, and I'm going to bring over the sticks to him in a minute. But so what's going on? The Fed purchase, right? As again, I said last time, as of October 15th, 0 new purchases from the Fed. Now, last week, the Fed, he was all but begging. Every one of the Fed folks were begging for more stimulus, okay? That is not a good thing. If you have not watched yet, Fed 1, Fed Part 2, great series on what I think about the Fed over the past and some decisions and big mistakes they're making right now. So the biggest thing is debt to GDP, okay? Now you look at this. Wow, right? Look at that. We are now up to 130 some percent. That is just awful, right? This includes everything, which obviously is not just what the Fed has done, the overall. I'll have Andrew bring in from the website current debt in U.S. As I said last video, it went over $27 trillion. So you know I'm not the only one talking about it. Charlie Biello, I grabbed this on Twitter, 31% debt to GDP ratio in 1981. We went to 61% in 05, 87, 101 in 2015, 137%. Folks, this is the number one issue. Had lunch with a client yesterday. This has to be addressed. You cannot continue here. This is awful for the overall American economy. Something has to happen here. Now, when you look at it, we are alone in this mess, by the way. Why do I say that? Because nobody has put as much money into this. This shows Rest of the world, emerging economies, right? United States is here in blue. Money, 3 trillion plus, right? China, very little, okay? Rest of the world, emerging markets. We are winning here, yes! We should not be winning this at all. It is not something that's good. We have to be careful going forward. Now, talking about this, bankruptcies continue to go up. Red line is 3-month average, actual 747. I went up the other day to see my son at Villanova. I was literally shocked at the amount of businesses riding up 202 that were gone. I mean, businesses that have been there a very long time. You don't see people in all the big centers there. I mean, it's just crazy, right? So if you see these bankruptcies, what's going to go from there? All right, well, it has to be unemployment. Now, the problem with unemployment, okay, it's staying consistent. 898,000 yesterday, 845, 849 the week before. We're going the other direction. Why? Because now we're starting to see white-collar unemployment. Because, go back to the slide on earnings, if you're down 20%, you have to make sure you've got your earnings number. The only way to improve the bottom line is to let people go. So this is what we're really going to be watching the next couple weeks, right? Overall, we're at 25,290,000, okay? That is just scary. Now, this morning, you may have heard a retail report came out. Yes, retail was up a little bit because remember, we were giving everyone money, right? So they were spending it. That is now dried up. We don't foresee a stimulus in the meantime. So, all right, so let's bring all this home. What's next? Take profits, raise cash. That's really a good thing to do when you go from 3 to 4. Raise some cash, wait for those opportunities. I've been doing that. Opportunities, dollars in the Fed, and then also we've been adding opportunities on the individual stock side. Can't give those names due to compliance, that are around these shutdowns that we're seeing. The volatility index is everything. We've been above 25 all year. That should tell you a lot, okay? It tells you when you're above 25, you're not investing. NASDAQ, okay, is north of 34 right now. So you really got to be careful if you want up-to-date information. Follow us on Facebook, Twitter, etc., putting out articles and hopefully some valuable information. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.